Part 2 of this presentation for advanced accounting covers goodwill impairment. How do we treat it? FASB Topic 350, Intangibles, Goodwill, and Other provides accounting standards for reporting income statement effects of impairment of intangibles acquired in a business combination. When accounting for goodwill subsequent to the acquisition date, GAAP requires an impairment approach rather than amortization. FASB reasoned that goodwill can decrease over time. It does not do so in a rational and systematic manner. When to test goodwill for impairment? Again, the FASB requires an entity to assess its goodwill for impairment annually for each reporting unit where goodwill resides. More frequent impairment assessment is required if events or circumstances change that make it more likely than not that reporting unit's fair value has fallen below its carrying amount. If after performing the qualitative assessment it appears that it is more likely than not the fair value is less than its carrying amount, step 1 of the two-step impairment test is required. Goodwill and other intangible assets. Generally, once goodwill has been recorded, the value will remain unchanged, except under two circumstances: sale of all or part of the related subsidiary, or a determination that goodwill has experienced a permanent impairment or value. Now, it used to be that this was reported as an extraordinary item, but this is no longer true because we did away with extraordinary items. So now it is part of other on the income statement. Assignment of acquisition value to reporting units. To better assess potential declines in value of goodwill, the goodwill must be assigned to its related reporting unit. A reporting unit can be a component of an operating segment, a segment of the enterprise, or the entire enterprise. Step 1 in a two-step process. Now, they are trying to change this to make it so that we only have step 1, but as of this textbook, we have 2 steps. Is the fair value of the reporting unit less than its carrying value? If no, then goodwill is not impaired and there is no further testing required. If yes, we go to step 2. Step 2, is the fair value of the goodwill less than its carrying value? If no, then goodwill is not impaired and there is no further testing. If yes, then an impairment loss must be recorded. So now let's take a look at an example. On January 1st of 2016, Big bought all the stock of Little for $450,000 cash and 104,000 shares of stock with $1 par and fair value of $12. The book value and fair value of Little was $1,298,000 at the time of the purchase. At the end of 2017, the fair value of Little's net assets was $1,425,000 and it was $1,325,000 excluding the goodwill. And the book value was $1,585,000. On December 31st, 2017, Big wants to know, is there any goodwill impairment? So now we have to first figure out what the goodwill was. So the consideration was the stock and the cash, which is $1,698,000. Fair market value of the net assets were $1,298,000, so we had goodwill of $400,000. Now, step 1, compare the fair value to the book value. The fair market value is $1,425,000, which is less than the book value of $1,585,000. And that means we have to go to step 2, determine the impairment loss. We know the fair market value of this unit is $1,425,000 in total. And if we subtract out the fair market value without the goodwill, it means that the implied goodwill has a value of only $100,000. We subtract the goodwill on the books, which means we have goodwill impairment, and now we can book our journal entry, which would be to book the loss, which would be part of other income, pre-tax, and we would reduce goodwill. Now let's take a look at the international standard. The IRS and GAAP require an assessment for impairment at least annually and more frequently if impairment is indicated. Both state that goodwill impairment, once recognized, are not recoverable. U.S. GAAP. Goodwill acquired in a business combination is allocated to reporting units, operating segments, or a business component one level below expected to benefit from the goodwill. However, under the international standard, in order for that to allocate it, it has to be a cash-generating unit. And that ends this presentation on goodwill impairment.